Hi friends, this is Kishore. Welcome back to my channel. Today my voice is a little bit under weather. Please don't mind. I would like to cover election year index pattern, J. Powell comments, earnings dashboard, earnings and economic calendar, bond auctions, S&P sector analysis, gold bonds, yields and index analysis. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. This is a seen and fear and greed index. This week it is in the grid. We know like last week also it is in the grade. And this is daily heat map. Most of them are green except mega cap. And this is bubble heat map. We can see mega caps are down less than zero, or few of them are a little bit of above zero. And this weekly heat map, most of them are green except the mega cap. As we see, AVGO or Google Meta, they did not make a big move. They are down, but rest of the other sectors made a really good move this week. And this is ETF weekly heat map for ETF. Most of them are green, especially commodities made a big move. And this is weekly sector performance. Real estate made a more than 4%, which is good. Communication services is the only one which is in the thick red. So, and this is earnings dashboard. So almost 490 out of S&P 500 S&P 500 stocks, 490 are reported the earnings, and most of them are good, but some of them are revenues are bad, like 39% are below their expectations. That is a little bit concern to me. Remaining are 61% is they posted above the expectations. So this is earnings calendar. Next week earnings calendar. These are the one I'm looking at: MongoDB, AI, C3 AI, GameStop, and Dollar General, Broadcom, Lululemon, DocuSign, and Robinhood. And this is the new zero dt options contracts are added to the index. Like right now we know SPX, SPY, we do the zero dt, and now they are added gold, silver, USO oil, natural gas, and also the treasury bond, TLT, 20-year treasury bond. These are all added for the zero dt option contracts. So once, I mean, may not be today or tomorrow, but soon, very soon, these option contracts also liquidity increases, uh, based on the volatility. And this is Powell brushes off rate cut bets as Fed moves carefully. So on Friday, Powell said, like, even though inflation is down, or inflation is done as expected, he did not ruled out the rate hike increase if the inflation comes back. And this is targeted probabilities for 13 December 2023 Fed meeting. Most of them are saying there is no rate hike. Most of them, just 1% saying like there is a chance of 25 basis points increase. And based on this probabilities table, in on March 2024, there is a chance of rate cut. 55% say they are saying like 25 basis points rate cut. This is the expectation. That is one of the reason why market rallied on Friday. And this is S&P 500 election year seasonal pattern from 1949 to 2022. So next year is election year. So if you see at the sitting president running the green line, when the sitting president is running for the elections, the this is the how the market rallied. So you can clearly see, like, from Jan to mid of Feb it rallied, and from mid of Feb to March it will went down. From there it rallied like anything till the end of the year. So maybe this is the same pattern may follow, because last couple of years market is following the seasonal patterns very closely. So there is a chance, maybe may not be, but there is a chance. And this is the economic calendar. So on Tuesday we have ISM services, PMI, and Joel's job openings. And this is one of the binary event to the market. Based on this data report, on this one market may go up or may go down. And this is also non-farm payrolls, unemployment rate, Michigan consumer sentiment pre-release. So non-farm payrolls also is very important. Unemployment I'm expecting little bit high. That will help the market to go up, because they think that if the unemployment rate is high, there is a very less chance to rate hike, and there is a very high chance to cut down the rates. And also on Wednesday we have MBA 30-year mortgage rate and ADP employment change. And this bond auctions dates, because right now the market is making big moves on the long term auction, bond auctions, and also the short term notes. So on 12/11 we have 3-year notes and 10-year notes, and on again on 12/12 we have 30-year bond auctions. So there is a big chance, if the bond auctions goes well, market may rally. And this is December market performance. This is already shared in my last week video. So the first 10 days of trading, it may be the flat pancake, and from the 11th or 12th day of trading it will go up like anything, based on the seasonal pattern. And this is dollar index. We can clearly see last week also it is almost the same. There is not that much big movement in the dollar. It went down and again it popped up, and it right now it is 103. If it breaks 102, as I said earlier, that's a big thing to the commodities. I'll share my gold chart soon. And this is a gold one. So it's a weekly chart. Right now it is at very at the it's a breakout level of 2022. So if it based on the volumes and the CCI and the bar, looking at it, it's it looks like it's breaking out the this level. If it breaks out this level, my target is 2454. There are two reasons. One is the Fibonacci level of this high and low is like 2454, and also it looks like it made a inverse head and shoulders, and on the right shoulder the volume is high. In general, in the head and shoulders pattern, if the volume is high on the right shoulder, means the either it's upside or downside, there is a high chance. So right now it is the inverse head and shoulders. So I'm expecting, based on the volume and the CCI and the bars candles, looks like it's breaking it. If it breaks this level, the first resistance is at 2294 and the second level is 2454. And this TLT 20-year bonds, as I mentioned here, at the time of 86 or 87, I said if it breaks 90, it can go to the 100. So right now it is at 92.99, and looks like it goes up to the 95. There is a chance, high chance, it's a weekly chance, because the Fibonacci level of high to low is like 95.82 is a zero point 0.5 Fibonacci level, and also there is a gap in the daily chart. So that acts as a resistance, as a confluence resistance. So I'm expecting it can go up to 95.82. And I shared already on 12/12 there is a 30-year bond auction. If the bond auction goes well, then it may gap up open, or if by the time if it not go up to 95, at that time it may gap up open and then it go high. And also on weekly chart, after a long time it broke the 20-day 20-week moving average. That is also good sign to the bonds. And this is a daily chart. As I said earlier, there is a gap at 95.82. So that gap can act as a resistance, and after a long time it captured the 100-day moving average. So the 200-day moving average, that's 97. So it may come down little here and can act as a conference resistance to the TLT. But if once it breaks these levels, like the gap and the 200-day moving average, TLT can go up to 109, I think. And this is TNX yields. So this acted as a very good support to the tailwind to the market. That's the reason this week market rally, like anything, it fell down almost like from 4.4 to 4.22. So there is a right at the support level. That doesn't mean it will not break. Looks like it will break because there is a high chance of rate pause or rate cuts are soon. So if that is the case, then it will go down. And this is the crude oil. We talked about this last week. This acts as a very good support from 2003. The 75 level is acting as a good support and resistance level. So right now they did not make a big move here. So right now it is also there. So until and unless it breaks the 75.96 and goes up and makes up to the 80, crude oil can go down and acts as a tailwind to the market. And the put call ratio right now it is below 0.80. This is little bit concerned, like when all the retail or the when a lot of call options are buying, there's a chance to market take either a downside or it can go the sideways to kill all the premiums on the calls and the puts. And this is one of the indicator I follow, 20-day moving average, sorry, number of stocks in the S&P 500 above 20-day moving average. It is there for quite some time at the 86 levels. So it goes sideways and still market can go down, or market can go sideways and this will come down to a 60 and some level, and then it will come back to 14 in the March or somewhere sometime in the January. So right now it is 86. So it's we need to be very selective in the stocks. And this S&P SPY weekly chart, we can clearly see 5 straight weeks it's a green bars, and the volume this week is good. The last week is the only short week, so I do not consider the last week's volume. And CSA is still going up. So there's no weakness in the chart, in the weekly chart. The candle is good, bullish candle, the volume is good, the CSA is good. So I do not see any weakness in the chart, but we never know what happens in the next week. And the daily chart, so right now it is at the 459 level, and the CC is a little bit going down, but the volume is up. So volume and candles are good. And if it breaks this level, this is at the 459.38. If it breaks this one, if it is a fake out, if it is a fake break, then I'm expecting the reversal at the 464.38. This is what happened in the QQQ. I'll share the chart soon. So My next week target is 460 ways upside, and the downside is 453, and the options also saying that $6 up or down. And this is the S&P small cap, S&P 600 small cap. So the small cap made a big move in on Friday. So it break this level and it went up to the, it broke the 0.618 level of the Fibonacci of this high to the this low. So 0.618 level acts as the reversal golden ratio, and also called it the reversal ratio. It broke that with a good volume and a good candle. So if it stays about 38.43, then it can go to the 39.58. And the mid cap, S&P mid cap, this also made a big move on Friday with a big volume, and CISA is going up. So I'm expecting the small cap and mid caps do well next couple of weeks. And this QQQ. So this is a weekly chart. In S&P, we see the weekly candle is good, but in the QQQ, it is not. It's like a doji candle, or it's kind of a spinning top candle with good volume, and the CSA is going down. So that's the reason I'm little bit bearish on the QQQ side. And in the daily chart, we can clearly see, as I said earlier, 1.1 Fibonacci 1.1 acts as a failed breakout, or fake breakout. So it went there and rejected there. So right now it's under 389.94, just above the 388.34. If it captures the 392, then it is good for the bulls. Otherwise, it can come back to the 385 level, because 385 level there is a big gap here. That gap can act as a support. If it breaks, then the next level is 378. And the CC also going down. That bit little bit concern on the QQQ side. And the IWM, this is the chart of the day, or this is the index I would like to talk more. So this is a monthly chart, and the blue line is a 30 month moving average. After a long time, it is coming up to the 30-day moving average, 30-month moving average. If it breaks this 30-month moving average like 191, then and stays above, then there is a chance of it can go to the 209. And we break this 30-month moving average in the April of 2022. So long time consolidation breaks up, can go to the 210 level. And this weekly chart, again, this is a 30 weekly moving average. We capture, as IWM captured that level this week with a good volume, and CCA is going up. So there's a high chance it can go to up to the 191 level, as we see. And the daily chart, in the daily chart, it captured the 200-day moving average after September. In the September, it went below 200-day moving average, and again it captured with a big candle and the big volume. So sorry. So it can go up. If it stays above this 180 level, then it can easily go to the 190 level. And this IWM daily chart on the Fibonacci level, I draw Fibonacci level. So it right now it's at 0.618 level, 184. If it stays above there, so next level is 190. So this week, $5 move on either upside or downside on the IWM. So 180 is my support and 190 is my resistance. And the summary is, looks like market is making a sector rotation from that high mega cap to the small and medium cap, as we see in the charts. And also gold is very good. Gold is breakdown. Looks like we break out the 2100 levels with a good volume and a good momentum. And this seasonally, retail, restaurant, travel stocks do good in the month of December and in the month of January. So I'm expecting the small and mid caps rally good this next couple of weeks. And utility stocks and REITs are benefiting on yields down. So a lot of money moved to the yields because of the good returns last in couple of months. But if the yields down, the dividend stocks like utility stocks or the REITs, they may rally. So, and long-term bonds are in buy zone. As we talked about TLT, TLT captured the 20-day moving average and few other things. So I'm expecting the TLT can go up from here. Powell is still not ruling out rate increase if inflation comes back. So we saw that crude oil is one of the major source of inflation. So right now it is at the good support level at 74 level. If it breaks that, then it's good for the inflation. If that takes as a support and rally again 80 or 85, then it's not good for the inflation. If inflation goes up, Powell may again raise the rates. So a little bit cautious on this one. We need to little bit closely watch the crude oil. And earnings revenue forecast is not looking good, as I mentioned in the S&P earnings dashboard. Revenue forecast is not good on couple of sectors, so that's a little bit concern. Otherwise, market is in the good shape based on my analysis. It's just my opinion only. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends looking similar kind of content. Thank you so much. Bye bye.